Happy Monday, everyone. Let's begin this Eurotrade session. Hope everybody had a great weekend. So, if we are meeting for the first time, before I get into levels, my name is Marcus D. I'm your host. I've been trading for almost 20 years, and 13 years out of that, I've been bumbling around prop firms. Now, I specialize in commodities. I'm not much of an equities trader, although I do sometimes trade DAX for this time of day, which we cannot trade yet on Topstep. So I'm going to be focusing on silver and maybe some copper. Copper seems to be moving today. And I'm seeing that equities right now, just like DAX, they're going through some gamma pinning, which is a very normal behavior for this time of the day. And also the reason why I initially chose this time. But yeah, so let's see if we can put some levels here. So the first thing that I like to do is to mark off Asia high and Asia low. Let me just see what I've got on the chart here. So let's just delete some of the old reference points here. Now, why is this VWAP so thin? That is the question. It is thin. Let's just make that a bit stronger. Here we go. So I always have Globex VWAP on there as a reference point. So Asia high for today on silver is up here. Now for now we've just narrowly missed that. And then Asia low is down at 49,380. So not a huge range for now. So with the London session, you will find that there are a couple of events that are not nearly as pronounced as they are on something like DAX, because silver and gold, they have this like weird behavior where nothing much happens during this time of day on a lot of the days. And of course there will be certain outliers to that. But you generally see this takeout of Asia high, then a reversal, back to the London Open. So London Open was right at 49.60 ballpark. So the very first thing that I would look for here is the takeout of Asia high, reversal, and then back down to maybe not quite the London Open, because we do have an options level just before then, which is a put wall at 49.70, and that'll be the next thing that I'll look for. And again, what is this? What does this? What is this line? Something's changed here. So I have no idea what this line is. Doesn't seem to correlate to anything. The next point is to look at the COMEX value high and low, because COMEX is the main session for this product, although we start seeing some livening up of the price action the closer we get to the London Metal Exchange Open, which is not now, but it will be in about 2 hours' time. During the first sort of 20 minutes, you can have the LME having this thing called the head fake, the fake out effectively. It goes the wrong way. Not always, but we see it probably about 70% of the days, where the market looks like it's going to go. Typically experiences about 5% of volatility increase around that time, which is why I usually say to people, for some of the products that don't generally trade the London session at its main session, like DAX, and you're trading something like NQ or ES, during this midday London fix time, you will see that huge increase in volatility. So if you were basing your stop losses on something that is generally happening during the quieter period, during the initial stages of the London Open, very frequently you will get taken out. So you want to make sure that you don't get caught up in that. And the London fix behavior is usually a sharp reversal from wherever you are at that point, but it's more, it's juicier in metals, let's put it that way, because the closer we get to COMEX, you now have the LME trading, and then you have, you know, a whole bunch of stuff that starts coming in volume-wise. And the LME is quite important in pricing of the metals in general, so it will have a greater effect on those products. I'm going to say I'm so sorry about my voice. Like, I woke up today, I don't know what's going on with my voice, so I am a little bit struggling to talk, but we'll push through it, so just bear with me. I'm on some new meds, so... So it sometimes gets a little bit tricky with side effects. Right, let's see what they do around this Asia high, which is a nice round number as well at 50 evens. Maybe I can do, you know, those weird makeup tutorials where they say cool tone lipsticks that make you look terrible. So maybe we can do an ASMR version while my body decides what it wants to do today. Yeah, so takeout of the Asia high, prompt reversal, maybe down to put support, put wall at 49.70. But I am just gonna do something else here. So let's have a look. Let's have a look at gamma walls and stuff. I've already mentioned a couple there, but I'm just doing some data analysis on silver because I haven't traded it in a while. And then I started trading it about a couple of weeks ago. By the way, I have one combine that I was working on, the one that you guys saw here. That's basically now in the new dashboard. So that's good. And I'm going to do probably another couple. And then we're going to see what's going to happen because my other account is also on the old dashboard. So I got some email that may need to change. But yeah, so I've got two more combines that we're gonna move to the new dashboard so we can have those extra phase waiting in the wings. Let's see, so they always keep shying away as we kind of approach. Just looking at how they're behaving here. So they got up to, who's they? The wizards, market makers. They got up to just over 50, just where that high is. I mean, I would really like to see a smash through that and then a reversal. What you see on the right-hand side is that I've anchored the VWAP to the highest volume bar on that push. I mean, sometimes they don't take it out, so let's see what the time and sales wants to say us, wants to tell us. Wants to say us? That's not English. See what the time and sale wants to say us. Now, if we bounce from this VWAP, which is anchored again to the highest volume bar here, then that might open up the possibility of me having a slightly larger trade, but I think for now it's all just scalpy territory here. Right, let's see who's in chat. Edward, Ryan, Yasser, Amanda, Ahmed, Mesapeti, Shay. Okay. Shay says, Morning, Dee. Morning, everyone. I passed my first combine at last. Let's go. Let's go indeed. Now you need to slow down. Okay. So try to limit the number of trades you're doing. Expect that the first week is probably not going to go that great, and then adjust for that, right? So instead of expecting that everything is going to be, hunky-dory from now on, the first goal in your XFA is not, let me get a payout. It's keep the XFA. So let's make sure that we adjust those objectives. Okay, so we're getting some sweeps to the upside here. Not a huge sweep, but it's a 20, sort of a 20 contract sweep. So somebody is finding value with a bit more size at this level. I don't know what they're seeing here, but maybe it's just they want to make everybody believe that they're going much higher immediately. But the sweeps, whenever you see them, they are quicker vertical moves. They take out multiple prices. That's what you can glean from it. It spells urgency. It spells I need to go get out or get in right here, right now. Okay, so that's what it tells you. And then with any kind of order flow event, you always need to ask the following question: what happens after? So don't just go running in as soon as a sweep happens. Just go, where is this happening? And what are they doing after? So now, if the sweep is an indicator that we're going to go higher to take out the Asia high, it's going to be, sorry, my dogs. Amazon man is not their friend, you know. They are very, very big watchdogs, about this size. Well, a couple of them are a little bit bigger than that, but yeah, so apologies for that. Yeah, so with the sweeps, or with any order flow event, the question is always, now what? So right now, after that sweep, they haven't really moved the price anywhere just yet. So we need to wait and see what the commitment is. And the sweeps, even on the regular price chart, if you're watching it in real time, you can see them as quick pops. So you know how Dovey says, ooh, I see a wobble. I see a wobble on the dome. That's what that is. Okay, so it's a sweep. Now I'm seeing a few sell orders here on the time and sales. I do have it filtered by 2 contracts, so to not show all the ones, but just 2s. But we can see what the tape is doing here a little bit quicker. But yeah, so this trade that I did, it was literally just that sweep in this candle, and I did expect it to go down to 700, but it didn't, so I pulled it off earlier than the target because I wasn't seeing what I wanted to see. I started seeing consecutive bubbles that are green. You do not want that when you're trying to fade a move. The dog on the couch is cute. Who is that? Oh, that's the River Bear. That's River Bear. He's awesome. I love River Bear. And why Rimmer? If you've ever watched Red Dwarf, which is a very old show, kind of a sci-fi themed sitcom, British. So we have 2 of those. We have Rimmer and we have Crichton. Always wanted to have a dog called Crichton. And then we got Rimmer, who's really tall. So he's got long legs, kind of like the actor who played Rimmer. And when he was a puppy, he was a bit moany, but then he turned into this most beautiful, cuddly boy. Come on, take out Asia High, man. What are we doing? So this is where patience over waiting for your levels has to come in. Because we haven't like we tagged the Asia high, and is it possible that it just reverses from here? Yeah, of course it is. And then fails the auction and I don't get my entry. But usually what tends to happen is that when you have equal highs, and this is what they are here, equal highs are not a good thing. They can be looked at as a poor high. So if you look at the larger profiles, and let's say you're looking at the entire Asia Globex profile, you will see that they kind of tag two TPOs exactly where they are. They usually get taken, right? Poor highs. Poor highs. Are they okay? Should we start a fund? Always found that phrase very, very weird. Poor highs. Are they poor? Are they poorly? Or are they just out of money? I don't know. Poor highs. What is up with a dump in NQ? I don't know. I mean, it could be just, you know, coming into... Actually, that's kind of a good point. Because all the metals are rolling, okay? And I'm guessing they're probably going to roll by the end of the day. If they don't, so end of the day, end of the week. Because usually it's every third Thursday, but we do have Thanksgiving, so that's gonna be a little bit odd. So maybe this little dump that we're seeing here, it could be them maybe starting some stuff. No, so they're not rolling yet, because the equities roll in actual December, right? They roll in December, whereas so the commodities, they will usually roll either on like the third Thursday of the month or the last Friday of the month, depending on whether it's energies or metals. But metals frequently roll into a new contract and then stay there for months, even though technically you have other options and other kind of levels and months. But they don't do what crude oil, RBOB, and heating oil do, which is rolling every single month religiously. So they just roll as and when required. And I can see that I think gold is gonna roll into February, whereas copper and silver futures are rolling into March. Yeah, exactly. Blue boy, poor highs. I'm sorry for the poor highs. Yeah. So banana century. Here's the thing. Predicted, but too early. It depends on what time of day you trade. So if it's if this is not your normal time of day for trading, then yeah, it's too early. All right, let's place some ADRs on here as well, even though they're very far away. I can't even see them. So ADR high sitting at 51.10. 51.10. Let's get rid of some old initial balance lines. 51.10. Again, sorry for sounding a bit weird. I'm trying to make this work, but my voice is just not playing ball. Okay, and then ADR low is 48.27. So we've got a fair bit of a range here. Let's say 30, 25, 30. That'll do. Because my platform does the exact numbers. Not right thick necessarily. It's being very pedantic. Okay. Let's plop a visible range volume profile. Sorry, no, fixed range volume profile from the London session, just so that we know what the hell they're doing here. Yeah, so it's not very evenly distributed right now. You can see it here. And currently dead in the middle of the middle. So that's a terrible trade location. So put wall is at 41.70. Call wall core wall is 50. So this is where Asia high is located as well. And in fact, let's just do this. So what you're seeing here, and what my previous trade was based on, is the gamma pinning, right? Because core wall and gamma wall is up here. And they frequently do this for London. They kind of try and running it up into the core wall, maybe a little bit past it, and then they start to consolidate. And then they decide where they want to take it a little bit later, usually around the London fix. And just looking back at some of my stats, the London fix is where most of my metal trades were done anyway, probably because of that mean reversion behavior that I quite like. So at that time, I will move the Asia low to the new overnight low if one exists, or keep the existing one, and then that becomes a good orientation point for that London fix reversal. Why do I chart on higher time frames? Because higher time frames are the ones that always win. They're also called the other time frame participants, and they're frequently commercial hedgers, hedge funds, banks, things like that. They do not necessarily play on tiny little time frames. They might have HFTs, like high frequency trading systems, but those sorts of systems are, you can't fight those, because first of all, they have size on their side, so they have an effect in the market. Very frequently, they will also have preferential rebates or preferential commissions that are vastly cheaper than what we get. But those sorts of services cost an arm and a leg. And some of those servers and systems to do HFTs properly, they cost like millions just in maintenance of those servers per year. So not just like, oh, one setup, a couple million. No, we're talking running costs of quite a lot of cash, right? So anytime I see people who are trying to scalp to that degree, doing 100 trades, 200 trades, 3, it's like, what are you doing? It's like, first of all, the commissions that you like, your broker must love you. You know, it's gonna take you to dinner, wine you and dine you. I was always on the camp of not giving commissions too much. So this is why my flex is to get a bigger trade where you pay one round turn and you get like 100 ticks, 200 ticks, 300 ticks if possible. But on average, you know, I will be taking about 70 ticks out of a trade. If I see a scalp, I wanted to have at least 35, 40 ticks inside it, or points if we're talking NQ. I don't trade NQ much these days. I used to, but then it went a little bit psychotic, and it's still arguably psychotic. So yeah. So yeah, and also, like the whole OKC fractals question, why do you try to chart on high time frames? It's a 30-minute chart, mate. This is not a high time frame. Just want to point that out. And it just shows me how this like current state of like prop industry, with everybody trying to do these tiny little trades and, you know, let's pass this and but it's very bizarre to me how the whole trading side of things has changed, coming from the old school prop, right, where you're trying to not get all of your profits eaten by commissions. And if you are in a market making situation, it's a different situation, right? So you usually have a volume to fill on the day. We don't, so I don't know why would you want to. But I suppose there's the lack of delayed gratification, There's the desire for quick profits. All of the stuff that's extremely, extremely negative for this industry. And the mindset of a trader, you know. And, we have something very special coming with Topstep later today. So make sure to not miss that, because you will be... some people say that we are, as a prop firm, that we're like, oh yeah, you just want eval fees. I don't think so. Not everybody is the same. Yeah, sure, there's some bad players in the industry, but we have the VIP program. We have, the focus trader program if you trade too much. And I know that people are not in favor of that in particular, because they're like, oh, but I only bought 22. It's like, it's 22 accounts in a space of a month. That's a lot. But I copy trade. I get it. But why did you lose them? Right? That's the whole point. So we're trying to slow people down. Try. And you can only do so much. I get that. But, keep your eyes peeled on the main broadcast today. What is catching my eye on silver? So the Asia high and call wall. So I would like that tested. And then maybe a little trade down to the put wall. Whether we kind of rotate back to the London Open, that's a possibility. Maybe even overshoot. And then we have the time of day when the London fix is happening. So probably another reversal. Now sometimes these reversals from the gamma pin, the call wall, especially if it's at the same spot as the Asia high, they can bring an extended move to the downside. But I don't know. We'll see. Let's speaking of higher time frames, actually, let's have a look at what's going on the daily chart. Let's that. Oh my God, that's a big buying wake, isn't it? And it's coming from the former demand area. So that it might just lend us a hand to go higher, but not right away, because we need to technically be correct intraday as well. And on the weekly, how does that look? Looks very distributed, doesn't it? Looks like a phase 3 distribution. Could be reaccumulation as well, but right now, it's very spiky. But we do have the roll coming into the end of this week. And because it's Thanksgiving, we may have to do that earlier. I don't know. I don't know what's going to happen. So the volume is already changing into March contract. Yeah. Let me just double check that before I just go, yeah, it's changing into March. And then it's like, read. Okay. If CME website ever loads. Come on, what's going on? Doesn't normally take that long. Yeah, Blue Boy says that's more than an account a day. I know, right? And people are like, but it's not that much. It's like, it's a lot. Just, like, you shouldn't have that. Like, okay, 5 per month as a copy trade, but don't lose those. Like, if you keep losing them, then something is off there. Your risk of ruin is too high. Yeah, so silver rolls into March. See. Aren't yeah, aren't they like Star Wars or the Siths? I don't know. I forgot. Amanda has a question. When it comes to psychology versus position sizing and risk management, which one do you think impacts traders more, D? Or is it the case that both of these have to be reined in simultaneously over time? It's all of it, right? So think of it as the risk model. Neither of those is a separate component. I spoke to my mom yesterday, and I think my accent is going to be weird because I obviously speak Serbian to her. Yeah, so if you're talking risk model for us who are independent traders doing this manually, the psychological component is a part of that. How long can you hold on to the risk model without any major screw-ups? That's, a question that you need to answer. So that will be a finer balance between the risk model, between position size that you're comfortable with, but maybe just slightly pushing the uncomfortable moments, but not so much that it impacts how you manage the position. And then, what is your daily loss limit? How many streaks? So there's also a thing like the profit factor on a day-to-day versus a trade-by-trade basis. So for example, I see a lot of traders who have amazing accuracy intraday, but they can't keep that going. So on a day-to-day basis, their risk reward is actually not working out, right? So they can have 80% accuracy when they have a good day. But then when it all goes pear-shaped, because of the slightly negative R, it all really goes pear-shaped, like total disaster. So then you look at their day-to-day performance, and it's not just a little negative. It's like on their good days, they do 30, 40 trades, and they make like $300. But on the days when they lose 2, 3, 4 grand. That's a heavily negative risk reward on a day-to-day risk reward basis. So there's two sets of that, risk per trade, accuracy per trade basis, and then day-to-day. So what is your accuracy on a day-to-day basis? Is it 40, 50%? And then it works, it's the same math, right? So if you stick to your winning days being larger than your losing days, that's a positive risk reward on a day-to-day basis. And then what is the accuracy? When you look at the month that you traded, how many days were you profitable? And if that number is lower, like let's say you have a negative risk reward there, so you're making 300 on good days but losing 2,000 on bad days, that's a negative R by 10 to 1. So how much accuracy would you need on a day-to-day basis to make that work? Very high. It wouldn't be like 30% and 40%. It would have to be nearly every single day. You have to be profitable to maintain a good streak that can then absorb the big loss. So if you don't have that, that is also a big problem. And I think many people get taken by the minutia of the day-to-day stuff, or in trade by trade, zooming in and tunnel vision and all that. And then when you scale out, when you zoom out, and you're like, what am I doing on a day-to-day basis? What is my accuracy there? Not many people look at that. But if you try and modify what you have as an expectation there, and if you can't string together 3, 4, 5, 10 days in a row, you then need to, I'm just going to put my phone on mute, then you need to modify things, because, low accuracy and highly negative risk reward, that will never work, right? You might get lucky, you might get a streak of like a week or two, but most people it's just a day or two before they start thinking they are the God's gift to trading. And then, time comes after you. Time is a true judge of anyone's performance. So if you don't have that dialed in, it doesn't matter what accuracy you have on a trade-by-trade basis. But if you do well one day, then F it up the next, and do one day, but the profits on the winning days are nowhere near as the ones on the losing days, that's messing you up. That's messing you up. So you need to sort that out. You need to really rein in the downside. And then you might, learn to stop and realize that there's a bigger picture to consider here. Just one more thing. So when it comes to the TPO values from COMEX, I'm just going to put those on there as well. 50, 50.28. 50.28. All the way up here. I'm just looking at whether this was this a Friday? I think so. All right, so I think this is a case when the TPO value and the volume value are a little different. But we'll have a look. 49.38 is the value low. It's right at Asia low. That's interesting. It's a good confluence there. This is interesting. Yeah, so this is the... Oh, maybe not. Hold on. Maybe not. Maybe not. No, they're still different. Yeah, so this is one of the few days where TPO value and the volume value are very different. So this doesn't happen a lot, you see. A lot of the times they are pretty similar, but not today. So, yeah, interesting. I would probably take the TPO value for sentiment here and say that we are inside of the final time of the day that we had on Friday. And then we need to wait and see what happens here. But until then, range bound strategies, right? So this call wall, smash through it, maybe reverse, small scalp down to 47.50, wait and see what happens into the London fix, maybe come down, take out this low, then maybe we might have some longs. But, you know, until then, we're just not at any point where I would want to get involved. Really want to see this poor high taken out. So that would be my first next trade after the attempted move for the London Open. And slight bullishness here was that they went up to the Asia high, reversed from it, but never actually got back down to the London Open price, which was 49.60. So I would like to see the London Open price tested. In the most ideal world, we would see smash of 50, reversal, and then London Open tested. So that would be the trade that I want to see. And then if I'm not able to obtain the call wall pricing or somewhere nearby after the poor highs are taken out, so that's condition 1, I would be looking for the Asia low and COMEX value low to show me the way. So we may have, this is looking a bit messy here, so I'm just going to remove that and double name this line. There we go. But time of day is a huge component to what I do, because especially in commodities, you have some very well-defined events that happen every day, like London Fix, NY Cut, Tokyo Open, Shanghai. All of that is very, very important in the pricing. Blue Boy says, if it's not a repeatable process, you're doomed to fail. Let's not call it doomed to fail, because that sounds a little bit like an ultimatum, you know? There's always a way. Dust yourself off, keep going. You know, the only certainties in life are death and taxes. Everything else is down to your will. But when it comes to risk of ruin, I've pointed people to this video before, but there is a video that I did like 2 or 3 years ago, maybe longer, just called Risk of Ruin. And it's like an evergreen video that is pretty useful to understand how your current approach is working out in like sort of the Monte Carlo situation. So Monte Carlo simulations are basically automated, thousands of trades, permutations in differently distributed ways to figure out the risk of ruin of an approach. It's a, I think most of the journaling platforms should have the Monte Carlo simulation as well. And it tells you if you run into an unevenly distributed probabilities time zone, how would your system behave? Now, the problem that most of us have with high accuracy and low or negative risk reward, especially more negative, if you're like 1-to-1, I'm fine with that. I'm actually aiming for anything over 1.3. So 1.3 and over, to me, that's fine. Because you only need 50% accuracy to make that work. But the more negative your risk reward, that is where I'm like, So 1-to-1s, and I don't have a problem with. I personally prefer to shoot for entering a trades that have, let's call it an intrinsic profit margin of 2 R's. So singles and doubles would be something I'm looking at. Doubles as a default, but if nothing else is available, then a single. And my stops are always based on the volatility of the product I'm trading. And I always try to keep my stop losses away from perceivable highs and lows. So for example, I see people who would go who would go long from this point. But to me, in order to make that work, and to not mess with the structure, and not cut through any candles, my position would have to look something like this. Why? Because your risk is all the way down here structurally. Like, it has nothing to do with like, oh, but my setup. No, structurally, this is where the previous low was on a 30-minute time frame. The relevant swing low. Can you find smaller inside lows? Yeah, but they're liquidity. They will be taken. So any sort of an inside low and inside high that you see comprised from a larger swing that had some volume behind it, those will get taken. This is why this will get taken. This is why this will get taken. But this one, yeah, it might get taken, but it may not. Why? Because it was made with a lot of volume. It's going to take a lot of strength to take it out. And this low here, well, it's kind of an inside low as well, isn't it? But why do we care? Because Asian low created it and London is holding it. So the time means that we're moving away from that level. So one of the qualities of this, the supply and demand zones is to have a decent move away from it and to not come back to it immediately. If they come back to it immediately, that weakens the quality or diminishes the quality. So the longer that the price stays away from something, it becomes a more relevant reference point. I'm just going to mute myself. Can you hear the dogs and how much? I do have a noise suppressor on here, so yeah. How do I like my coffee? I like my coffee as an espresso, as a cortado, effectively. It's espresso with just a little bit of lactose-free milk. No sugar, no nothing else. Just, And when I'm with my mom, I do drink pure black Turkish, or as we call it over there, direct translation, domestic coffee in Serbia. It's Turkish coffee, basically, so yeah. But yeah, so small, not too much volume, so I want my espressos to be concentrated and just a splash of lactose-free. It used to be a splash of normal milk, but that changed last year. And I honestly cannot stand oat milk. I cannot stand rice milk. I'm allergic to almonds. So unfortunately, I cannot do pure black espressos. They're like quite full on. I would like to, because I know a lot of my Italian and Serbians, they will prefer the black coffees. I tried. My stomach just doesn't like that. But splash of lactose-free milk. Arla does a great one. It's my favorite milk. And that's it. Pretty simple, I would say. Ryan, thank you for that. It says dogs will be dogs barking is tolerable. Thank you. Okay, good. Black Turkish coffee is the way to go. Yeah, I mean, it's good. Corporal says, morning, I've been learning about GEX these last few days and I wanted to ask you. I read that the official open interest values are updating at 7:30 a.m. Eastern. How do you calculate the values before that? You don't. So I basically use end of day values, and then they largely become pretty consistent throughout the day. So let's say the only time that wouldn't be true is if you had like a big outlier day and then you lose all of the end of day values. But MentorQ has this thing called the intraday indicator that will update the gamma flow. And I think it's something like 16 times a day or something crazy. Oh, by the way, tomorrow I will be on with MentorQ boys. So I'm going over to their channel at 4 p.m. my time. That is 11 a.m. Eastern, 10 a.m. Central. So we're going to be talking about silver. We're going to be talking about metals in general, energies markets as well, RBOB, natural gas, things like that. And so I'm going to have a nice chit chat with Fabio. But yeah. So you would, you would expect that the end of day GEX levels and call and put walls are not going to change much. I mean, maybe the 0 DTEs might change a little. But even so, if a level, like you have to understand what they are. It's like open interest at the level, at the strike price. That's not like if it's a significant level, like call or put wall or GEX 1, 2, and 3, that's not going to go away. It might be, downgraded a couple of things. So maybe a call wall becomes GEX 2, for example, but it's still going to be there as an orientation point. And it's still very likely going to be reactive, right? Whether from the back test or the immediate test as a reversal, that's a matter of context, as always. It's a level like any other, but it's just a more relevant thing because you can see, like that's the core wall, right? You can see why did the Asia level stop right there at 50? Well, because that's a core wall. And that's the market making activity where they will hedge. And it's called gamma pinning, right? So if there's a call wall and they just get out to the gamma, they will pin it and then they will sell it from there, right? Sometimes they go higher. It depends where the call wall is. For example, there's a put wall here. I don't think that's super strong. But yeah. But yeah, the fact that the call and put is so close together, I would say that would speak to the rollover, because usually you would expect the puts and the calls to be pretty far out, but now they're not. So I'm guessing there will be a lot of people who are maybe hedging or doing some spreads, and that might cause us to just go into a bit of a nothing day. This is certainly consolidating now under the gamma wall, so I sniped one. I was kind of hoping to have another run at this where we take out the Asia high, so basically a second trade based on the same idea, but it doesn't seem like it wants to do that just yet. So we have to wait. We cannot just click buttons like lunatics and just again, no disrespect to Coach Jay's team, and then clicking buttons like grasshoppers, boing 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 boing. And then you're like, oh, I blew an account. I wonder why. So, some common sense, man. That's all I'm asking for here. Just some common sense. Like, wait for your level, breathe. Don't be a, 3-year-old throwing the toys out of a pram. My level is not here. I want to trade. Well, that's great, but just wait. Just wait. Like children, they don't have the developed sort of, they want everything instantly, right? So the delayed gratification and the inhibitions and the impulse control is not well developed in children. And yet I'm so surprised through this trading and coaching how many people still in their very old age don't have their impulse control down. And to me, that's like impossibly weird, because I'm somebody who's always had impulse control. It's like I've always been able to wait, be super patient, not to expect everything immediately. But yeah, so. Right. Blue Boy says, "Oh wow, D, I use the MOC range to project the next day." Yeah, that's called the late spike. You know how Hogue says there's a late spike. So if there's a meaningful MOC movement, you can actually very nicely figure out what's going to happen the next day if we're somewhere around that range. Hogue uses it all the time. He doesn't call it the MOC range, but he does call it the late spike. So next time you hear Hogue talking about the late spike, you two are talking about the same thing. And again, it doesn't matter how many times I see this, but the longer that a trader is in the industry, the more I see that we get the same outlooks and observations, maybe using completely different concepts, but still, if you've been staring at the charts and order flow long enough, you'll come to the same conclusion. And sure, there are differences in the approach and, you know, styles. Styles can be as different as many people on earth, right? But the main thing is that we all look at the same price action. We all look at the same volume-based mechanisms. And, you know, I quite like how Dalton puts it, that price is just an advertising mechanism of volume. And then you have some other people who say, oh, volume doesn't give you any advantages. Okay. So, you know, when we're talking order flow and tape, there's no doubt that, for example, if I show you this, and if we kind of scale out, so look at these guys here. This is all large orders, right? And what are they doing? Well, on the approach, they are effectively getting out of a position. So what happened after? We are consolidating. And to me, right now, this looks weak, but we have no commitment. We have no commitment. Is there anything on delta that we can figure out? So there's a bit of delta divergence. So delta is making a new high here locally, but the price is not. So this could actually be opening up the possibility for a larger downside move. Okay, then my tag my ADLO. But do I want it here? No, I want it at 50. I want it up here at the very least. Take out the poor highs, then I have my trade location, and then I have a bigger risk reward. Me getting involved here would mean me being a grasshopper and having to wear a grasshopper hat that you all know and love, right? Blue Boy says, this is a weird day. I won all trades in one account, and in the other I keep getting stopped out. I better stop. So here's a question. The second account, have you been already trading for a couple of hours or a few hours by the time that you started trading in the other account? Or is it a different product? So whatever it is, it could be your mental capital, if it's the same product, but you're trading in a different account. Or if it's a different product, maybe it's just not the day for that product. This is why it's good to have different accounts, not for copy trading purposes, but for, let's say, having one where you just trade NQ, then another one where you just trade gold, and then maybe a third one where you trade everything. See how you do, right? You have a grasshopper hat. I do indeed. I do indeed. I'm not in a trade right now, so we can wear a grasshopper hat. But I also have a grasshopper puppet. His name is Hopper McTilt. And he will be making a debut as your unreliable mentor on my own YouTube channel. But, you know, more on that to come. But this is the grasshopper hat. He's got eyes and everything. Hold on. So it's gonna mess up my hair, and I just washed my hair. There we go. Should we I'll try not to turn into a grasshopper today, but we'll see. There we go. How'd you like that? Yeah. So this grasshopper hat, it was actually a funny thing where when we had our own little tiny prop department years ago, this was before COVID, and whenever somebody would like do a whole bunch of trading that made no sense, they had to wear the grasshopper hat on the way to the office for a week and in the office during lunch when we're going to the pub, and it was like a negative reinforcement technique. So yeah. Asing says, do you find it annoying how Anne-Marie tried to hold your age over you? It's so weird and cringe. No, she's very motherly. I love Anne-Marie, and she is older than me. You know, she is, what I found weird is because I, not in that regard, but just that, you know, people kind of maybe expect that my husband is going to be also like 45, but my husband is actually almost 60. So they are the same age, and I don't think she knew that. So, you know, when she said, oh, could be a mother, and I was like, yeah, teenage pregnancy. So no, I wasn't annoyed at all. I think it was very sweet because she does care about everyone, really, and she is lovely. So no, but, you know, when I get to 60, I might look at 45-year-olds as young as well, you know. I certainly look, you know, 25 and 30-year-olds as young people, you know. So it's not weird, it's just how it is. So no, not at all. I actually loved it. I think it was very sweet. And she didn't try to hold anything over me. She just said, oh, I could be your mom. But it was very loving, but there you go. Where was this hat before 2 days? Yeah. AG Finance. Cute. You have 6 eyes now. Yeah. Just make me into a spider. That's it. Yeah. Kind of share the tools you use, like Motive Wave or others. Thanks in advance. The tools that I use are, like, for charting purposes, it's my tools, because I have a software development company called Blatek. So we have a whole bunch of stuff. We actually just finished our Discord utility, so I've just connected that to YouTube. All right, so we're getting to 10:30 time when we usually see a little bit more life, but generally no follow through. So we'll see. Yeah, so other tools that I utilize is Mentor Q. You'll find them on my own channel, Market Stalkers on YouTube. What else do I use? I use Edgewonk, sometimes Edgeful as well, but Edgewonk is a data journaling platform, so trader journaling, that has like custom metrics, so I quite like it. Should we get rid of a hat or should I keep it? And maybe I should show you the Hopper McTilt. There he is. Ha ha! So high. Buy higher or lower. That would be Hopper McTilt. Hopping from one bad idea to the next. Most people. Yeah, so I have some ideas for my you know, comic relief side of the channel. So we'll see. But yeah, then I do use interactive brokers for the options chain. So I just look at where the open interest is. Sometimes intraday that's needed. Other times mentor Q is all that's needed. What else do I use? Not much really. I mean, it's just so TPO profile, quantitative extremes, ADR high, ADR low, actual structure, market structure, so Asia high, Asia low, and that's pretty much it. Just time of day is the final component to that. You know, I don't have like a million moving parts. I've got 4 or 5, and then time of day being one of them. And I also have 4 or 5 core setups that I then flip. So there's variations, of course, of the setup, but when it comes to the actual tools, I think I'm actually pretty simplistic. I use Bookmap for the order flow, and it's similar stuff to time and sales, but in a visual representation with a couple of indicators. I have Bookmap settings on my channel as the final video that I did, the most latest. Here was that sweep that I was talking about, but then what do we have after? Nothing. They actually went down, then they consolidated, and now they're still sitting right above that put wall. So they've done nothing, and until that changes, I shouldn't do anything either. But yeah, here's a high, here's a low, very big value, reasonably large value. So we'll see, but it's not looking that great today. Again, holiday week, rollover. We're sitting inside developing value as well. Again, just chopping in range, chopping in range, chopping in range. Thoughtful of you to wear the hat for entertainment. Yeah. For Bookmap, do you find it a bit more for micro scalpels and short? No, not at all. I think it's useful for both. In fact, if you want to run a bigger trade, and as in not in size, but in ticks, there's something like a delta divergence that can actually help you pinpoint the right time when you should be even considering entering. And then you basically use it for timing purposes and wait for either some sort of a sweep followed by a good reversal to enter your trade. And then if there's a delta divergence there, like let's say a price makes a high but delta doesn't, or delta makes a high but price doesn't, that's all delta divergence. So then you can have a look at what happens after you enter the trade, and ideally you should see some larger orders or maybe even some icebergs. Now, you would need the time and sales for that, just to spot them. But on my products, icebergs are not really like that difficult to spot because there's not that many participants. It's a thinner market, so you can see them usually by a mile out. Because everybody trades like 1 or 2, and then suddenly you start seeing 5, 5, 5, 7, 5, 10, 12, 10, and you're like all around the same area, and you're like, what is happening here? And then when you kind of combine with the level and the area and then context, you're like, well, what should happen? Have an assumption of what should happen at the level. Just don't go guessing. So have an assumption, then look for evidence of that happening. But I've been able to effectively just stay in on trades. I don't look at Bookmap once I obtain my entry and have the initial move away, but then I will move to a 30-minute time frame to stay in, and then I will wait for each 30-minute period to end. But I will every so often, so at the end of each 30-minute bar, I will come back, I will have a look at Bookmap and see, is there anything here that might cause me trouble? Is there anything here that's maybe telling me that there's not enough? But usually Bookmap, unless it's a big reversal at a point, it will show you that the volume is just lackluster, or then maybe you know, if you're looking for a continuation, maybe there are some buyers there. So the buyers keep coming in and the volume bubbles are growing, but the price is not moving. So what's that? It's absorption, right? So you can see it, and that should give you a little bit more confidence to stay in on a trade. So I think a lot of people use Bookmap without knowing what they're looking at, and they're just like, oh, pretty bubbles. But there is actual signs that you can follow quite nicely. Where's the GC rollover? Well, technically at the end of this week, but we have Thanksgiving. So yeah. Scalping is more for the ladder or dome. I agree. Yeah, even though the ladder on Bookmap, I've never really resonated with it for some reason. I like the ones that are on Topstep X. Why? Because they have the ask and they have the bid. So I prefer that. You can see it clearer than just like everything just smushed in one single thing. So I don't really use the dome on Bookmap, but heat maps I love. I love the large order indicator. I love the sweeps indicator because you don't have to sit there. You can just see it and see it historically happening. So even if you miss something, you don't have to be there. Whereas on the scalping side, like for example, right now, version of a scalp would be to see these 16 orders and then to try to look at some volume and then swipe those, and that would be a scalp. Whereas the way people scalp today, they try to look at the normal price chart and it's like, what can you see there? Oh, I can see the highs. Okay, great. But what about the 14 that's just appeared here? That's another scalp. So maybe now we go down. That's market making. That's what, you know, that's what you should be doing. And not like, oh, looking at Renko. I took 2 ticks for Renko. Like, what do you want, a medal? Like, but then I got run over for 20. Ouch. Like, yeah. Because you don't have the level 2. So, yeah, I fully agree with that statement. Ladder for scalping. Don't be a true scalper. Lose your eyes on this. But for the slightly bigger chunks, bigger trades, this is heat map, price action that shows you volume, that shows you large orders, that shows you sweeps, that shows you exhaustion. Don't know whether there is one here, but here we go. Large orders, buyer exhaustion, seller exhaustion, all of that. It just stays on the chart. That's why I like it. So, you know. So those are some of my tools. So nothing crazy. I think I keep it fairly simplistic. I mean, I think the way I talk maybe makes it sound, but I always say it's always the same levels at the end of the day. And it's like, you know, Asia high, Asia low, value low, ADR high, ADR low, time of day. It's the same. So I don't see that. Yeah. Could you show us some market profile strategies one day? I thought I show them all the time. So, you know, you have, for example, right now, you have a possibility to join the auction upside on silver. So why? Let's plop in the initial balance. And, you know, the strategies there are more contextual. Just gonna move Hopper out of the way. Hopper make tilt. Have a little cuddle. He's had a bad day, so Hopper needs a cuddle. Okay. Go to sleep, Hopper. Yeah, have a nap. You'll feel better. So initial balance low. I'm hot in this hat. I'm gonna take it off. I'm sorry, guys. I get really hot. I just messed my hair up. I did my hair last night and everything. Initial balance high is up here. So, a couple of options, and these are just playbooks. You know, contextually, profile is a situational awareness tool, so it's not like, oh yeah, you have to do this. Like for now, looking at the larger profile, I can see there are poor highs up there. Why? Because there's a double top. That's what it is. But when it comes to the initial balance, let's just remove this for a second. what could happen? Well, we can fail the auction, which we haven't done yet, right? We've been dancing on the initial bounce high. So failed auction would be if we close one 30-minute time frame inside confidently with no buying wicks into the former initial balance range, which is the first hour trading. And then the expectation for that is that we rotate all the way to the initial balance low. Problems with that today, we have a put wall, we have VWAP, both of which is showing you that there's open interest right in the middle, so not ideal. If that goes, it gives you more, maybe a bigger swing down to the Asia low area, okay? Now at that point, when we get to Asia low, we would have extended the initial balance to both sides. That actually increases the probabilities of fading it the other way from the Asia range. Why? Because when the initial balance extends to both sides and there's no strong movement, there's no single prints, there's nothing at all, just kind of distributed evenly, like overlapping candles on the way to the area, that is a perfect range trade, right? So with the context of a potential rollover now, the context that we're still inside the Asia range, which frequently sets the tone for the day, and the fact that you have, very nicely distributed Asia range, this becomes the high probability neutral day fade trade. But with a neutral day, yeah, sometimes you can run it all the way to the other side, but really the neutral day fade has a target of the middle of that range. So whether that's profile on the day or actual VWAP, or something else, point of control, that's also a matter of context, but I very rarely run my range trades, especially that have a very sizable range, all the way rotation to the other side. Maybe if I'm crude oil short, then I will extend that, because crude oil has a short bias. And, silver has a long bias, but the time of the month, the rollover, it just, to me, I think they've done their business. And now we're distributing on the daily. Could this go up? Yeah. It will happen today? Probably not. But, like there is a good chance of reaching 50. Anything higher up, I mean, look, maybe, just maybe, we reach 51 today. Maybe. But it's just, I don't know, it just looks very lackluster for now. If that changes, obviously my outlook might change with it. So an alternative to the neutral day fade here, if I don't get it, would be to maybe just join this auction. I don't like the risk here, and I don't like the double top. We had the poor highs. But we can, we can also expect that maybe, just maybe as a lower probability trade, we just go higher as a break of the initial balance, test of the initial balance high, and a continuation towards the ADR high, which is all the way up here at 51. It could happen, right? With a trend, we're coming away from demand. So that would be one of my hypos. So I generally write 3 or 4 hypos on the day, two longs, 2 shorts at different levels. So not all like, oh, line in the sand here, longer short at call wall, longer short, and like that's not a plan. That's like one level and then just 50-50 chance that it's going to work. It's like, what is your, is there an asymmetric opportunity there? And which one will be better? Longs up here or longs down here? Which one has a better asymmetric opportunity to work? Just from like a regular distribution curve and the distance from the distribution curve. Which one do you think? Well, longs here, shorts up here, right? So, and maybe even some shorts here in this zone between 50 and 50-30. But longs here, to me, would be too high up in the distribution curve for any meaningful setups. So I don't like to take those because I'm a nerd and I want my opportunities and trades to be asymmetric. It's just how it is. That's what I'm comfortable with. That's why I like mean reversions, because of the way I see them, if the conditions are correct for a mean reversion, that is a much better trade for me than trying to mess around in the middle and going, whoopee, I caught momentum. I'm like, great. But if that went wrong, it would have been wrong a lot. And, you know, and then you get chopped up. So you go long here, you get smashed. You get long here, you get smashed. Instead of waiting nicely for the event and then a decision post-event, that's what we want to be doing. We don't want to be going, click, oh no, click, oh no, click, oh no, click, account gone. That's, you know. So you want, even if you get yourself in the drawdown, you want to live for like 2 months in a drawdown and just learn how you behave. That's, you know, it's a challenge, isn't it? But it's just one of those, I suppose, just nerd things where, you know, I just don't like middles of middles for anything. I will always look for a way to position myself. Even on a breakout, I would prefer a pullback and then to go in. So I want to confirm the pullback, sorry, the breakout, and then to wait for a decent pullback to some sort of maybe a new reference level, which is where the profile comes in. Because as the auction is progressing, you also get new levels that crop up, MGI, market generated information. And that could be in the form of a single prints. You know, they're like kind of, let's say on the upside, they're like demands, right? Because they are moves that happen pretty quickly. So upon a retest of those, if they hold, again, you look at tape and see whether people are plowing in there in the same direction or not, then you can actually swipe some pretty decent trades. But, you know, it's a science as much it is an art. And I think the main problem in the industry is not necessarily, like, you know, the institutional traders are not like, oh yeah, he's more disciplined. We've seen many kind of really messed up people in the banking industry who, you know, they are falling apart. They, you know, they drink a lot. They're like, their life is a mess. But they're smashing it. So it's like, is it discipline? Or is it the information asymmetry? Why? Because the retail trader is like, I've got a candle. But the institutional trader is like, I can see absorption there. It's like, oh, it's a breakout. It's like, yeah, but I'm seeing absorption. They're not pushing this higher. And the volume is growing. Volume churn is happening. But price is not reacting. This is a short. Whereas the retail trader is like, well, I've got an FVG. Like, so which one do you think is going to do better? The guy who's like, oh, I'm very disciplined, but I only look at the price chart. Or the dude who is completely undisciplined, complete muppet in life, but very good trader because he can read tape. You decide, you know? All right, so we're now kind of trying to fail the auction. Again, we're slightly too high up, and this put wall is definitely a problem for me. So again, I have the extremes of this, which we didn't tag during the stream, unfortunately. We probably will tag it during LME and the London fix, which is at midday, so 20 minutes after LME opens, then you have the London fix, and that's why the head fake usually happens for LME. So you have a perceived move, and then they sort of do a sharp reversal. So if at that point we take out Asia high or Asia low, and then reverse, I will be trading that. Apart from that, I don't really see anything else. But silver I've been liking a lot. Crude oil just rolled. I don't think they rolled RBOB yet. Oh yeah, they did. Okay, so RBOB rolled as well. So I'm not going to be rushing into energies. And natural gas rolled. Yay. Okay. Heating oil didn't roll. It's alright. I don't trade heating oil that much. I trade RBOB more. Yeah. Alright, so I'm going to finish it here a little bit earlier because my voice is still tricky. It's a little better. But it's still very weird. I think this allergy medication that I've been given is a bit too strong. So I don't think I need that. Alright. Let's maybe get a couple of things. Banks get in trouble with illiquid names in the fixed income space. They don't get in trouble and make tons of money. Yeah, in liquid markets, absolutely. Yeah, so illiquid markets, bonds, well, I mean, bonds are very liquid, but they are slow and they have so much size. However, generally, if there's no like monetary policies, they can be super quiet for extended periods of time. This is why like spreads work on them. But when they do move and when they move against them, that's terrible. Now, I'm not sure how many illiquid markets the banks would actually trade, because people who trade, and what do you mean by illiquid? Because they wouldn't trade odd products just because, right? So for example, if you have RBOB and heating oil, very quiet. Why? Because people who trade heating oil, they have to be in it. It's not a speculative product, right? So when you look at the dome, even on RBOB, like I don't know how many people are speculators. At this time of day, it's very thin, right? So you have 9 contracts here, one here, one here. These are all people that have to be in it. Very few of us are actual speculators on RBOB. And heating oil is going to be even worse, especially at this time. Yeah, so there's no liquidity until this populates. Look at this. So if you entered here, your spread would be absolutely horrendous, because you don't even have anyone on the other side. So they would just basically enter, and then you would be matched with someone all the way up here. So your fill, it would be at like, you want 240, but you're going to get 240.47. You want a short, well, short might work because you just about have one contract here. So you'll be matched with that person. But then if you wanted a short up at 415, maybe it'll fill you at 413, maybe at 409, but maybe, just maybe at 390.94. So, liquidity, yeah, it can get you in a lot of trouble. This is where also Dome could help. All right, so we're tagging the put wall. Not that that's my level of interest, it's just doing a commentary. Remember, my levels of interest, which will hold throughout the day, by the way. So if we don't, manage to get anything for LME, all of these levels that I've put, they remain as orientation points on the day. Put wall is middle of the middle. Don't like it. Asia high, COMEX value high, definite zone for potential sells. Other than that, if we go higher than the retest of Asia high, and then a further move into a value rejection towards ADR high, that would be another option. But in the most ideal world, we would take out Asia low, inside low, reverse with a trend, and then go higher. But we shall see. And, you see that I do have like some, think of them as execution flow, right? If you're even a little bit into coding, execution flow. This needs to happen first so that this and this and this can happen. So for example, if we're talking breakouts, which I hate, for me, a breakout will be break above the Asia high, close above it, then a pullback, and then an entry. So there's like a 4-step process, and not breakout, I'm in. And I think that's the difference, right? So also when you want to fade something, so break, return to range, then fade. Not break out and then fade immediately. We have to, not guess as much as possible, because, it's so easy to guess, so easy to turn into a fortune teller in this game and just go, I will be right. It's like the market doesn't care. But it doesn't mean that you shouldn't. So, execution flow. This is why I like flow diagrams. What needs to happen for my trade to have lower risk and asymmetrical opportunity and to not be a grasshopper trade? So answer those questions and keep answering them day after day, and you'll get much better. But sitting there clicking buttons, no visual aids, no execution flow, know what you're supposed to see before you actually take action. So train yourself to have a binary decision process, like a flow diagram from one box to the next. Okay, so you have one box which says level, then another box that says something happens at the level, and then the third box, what do you need to see, and then final box, take action or no action. Binary decision process after an execution of something. So right now, I don't even have a level. So my box is not even starting. I had a level before I came on the stream, which is why I have this. But then it didn't go all the way to my target, and it started to reverse. So I'm like, well, I'm not gonna sit here and hold that high on hopium. So I just took what was there. But until we get back up there, at least close to it, and we haven't been back there. Like, I wanted to tag 50 again. I do. I really do. Please. Please. Just joking. All right. Yeah, the big square box called an FVG. Yeah. Hey, they're the same thing. Fingerprints and FVGs. They're the same thing. Do you pay for the Global Plus? I do indeed. I've been using Cedric. I've been using Bookmap for over 5 years now. So yeah. It took me a while to get the grip with it, for sure. I think the first year or so, I was like, oh God, this is like time and sales. But then I discovered that they had indicators. And then at first they weren't that great, but then they improved it over time. So yeah. Blue Boy says, breakout, I'm in! Hurts so bad. I know. Oh, you didn't answer my question on oil. What? I missed it. I probably missed it. It's, if US attack Venezuela, could we see the same reaction for oil as the 12-day Israel-Iran war, where the day before the end? No. So, to my knowledge, like, Venezuela and oil exports, I don't think, like, are they that high up? Let's see. I mean, they have a lot of reserves, but... Right, okay, hold on. What am I thinking? I was thinking somewhere else. I thought Venezuela was... Oh yeah, Venezuela. Sorry, it's too early for that. So the oil reserves. Let's see the exports. Okay. I mean, it could. I don't think that they will be attacking them. I think that's a little bit too close to home. Because remember that, like Venezuela has its problems, but it's not exactly sort of an extremist country that could cause like problems in other parts of the world with like you know what I'm talking about. Let's not get into that whole side of things. But the problem that the West had with what was going on in the Middle East is that it looked like it was going to get totally out of hand, with the fanatical nations suddenly getting you know, their hands on nuclear weapons, and you know, and then them also fighting over each other, and just so it was a mess, complete mess. And I don't think that's a possibility in Venezuela, because I don't think they will be going around attacking a country that's frankly not too far from US soil. I don't think so. And, you know, you can say what you want about Trump, but he's not a warmonger. Like, out of all of the presidents that the US has had, I think he's one of the least warmongering presidents. I know this would be an unpopular opinion, but for example, Hillary was very much a warmonger, right? She was like, yeah, let's attack everybody. And it's like, okay. And, you know, Bill Clinton attacked us. Whether it was a diversion from the Monica Lewinsky thing, I don't know. I still don't know. But I went through a bombing of NATO bombers because, you know, and we are, you know, Serbia was a European nation. Like, we're located in southern Central Europe. He bombed us. That was weird. Is Trump going to do that to Venezuela? I don't think so. I don't think I think he's the kind of guy who, yeah, he's a bit weird, but, out of all the presidents, I don't think he's the one to start a conflict unless 100% absolutely necessary. Is it necessary to attack Venezuela? I don't think so. But yeah, it could have an effect on oil for sure, but I just don't think that your scenario here would be, the same thing as what happened in the Middle East, because it's a different geography completely and different outlook. But yeah, crude oil is definitely reactive to anything that could jeopardize reserves. Right now, I still think that crude oil is in a range. And we just rolled into new contracts, so it's going to be a bit weird. But yeah, it's still a range. So I don't think there's anything right now. And if any kind of conflicts or problems. So here's the thing. When you're looking at the supply of crude oil, are the refineries still working? Or did they shut down? Now, if they shut down, crude oil might be in trouble. And you will see gold shoot up. It did happen back in the day when the Middle East conflict shut down refineries. So we saw, it was one of my biggest days, I think it was 2014 or something, 2015 maybe, where I made 86,000 just longing crude oil, which I hate doing, by the way. Always short crude oil. But my biggest day on crude oil wasn't even a big position. I think it was a 3 lot, which was crazy. So yeah, it's I think it's a different outlook completely. Like when you're looking at geopolitical events and risks, you have to see where they're happening. And traditionally, what has been a problem in that area? Like traditionally, Middle East, always an issue, right? They're always fighting about something. Arguably, where I'm from, Yugoslavia, former Yugoslavia, Serbia, and then you have neighboring countries, Albania, and all that. Yeah, problematic area. Conflicts, very likely. Why? Because we Muppets. But it is the world, right? It's the area that we live. People are a little bit opinionated over there, and very difficult to, like, they're very stubborn. Very stubborn people. They're not like evil or anything, but they're very, very stubborn. And they will hold on to their, my dad was like that. And that's why, that's why you have conflicts, because it's the cultural sort of identity that goes along with certain parts. Now, Venezuela, I think they probably have more problems with cartels than anything else, but you don't fight cartels by going all in offensive on the entire country, right? It will be done through, I'm guessing, like police or, special services or FBI, CIA, whatever. But yeah, you wouldn't just go into an all-out war just because there's like something outside of the political side of things. Because, in our countries, like for example, in my country, we had a politician that was causing issues. And then we had other politicians who in the meantime died, who also caused trouble, but then they died of like cancers. And the other one died in captivity. But it's like, so they kind of escaped the law. And yet, it's politics, so you have to deal with it in a different way, I suppose, is what I'm trying to say. But whenever you have crime in the country, you don't just, like, that is like criminals doing stuff. You don't go bombing countries just because they have a high crime rate or attacking them. So I don't think it's the same. I think it's a very, very different thing. But it might have, if something happens to the oil refineries and stuff and to the oil reserves, yeah, you will see an effect. So oil could shoot up very easily. Will it be sustained? It depends on the event. For example, we saw crude oil go negative because we lost China's crude oil, China travel during COVID, which shaved off the demand for crude oil. Why? Because we lost 15% of world travel. So now suddenly we have an oversupply of crude oil. So what happened? Crude oil went negative. Why? Because China stopped travel. It's a big deal, right? So you have to put things in context, even with geopolitical events. It's not so like black and white. It's like, oh yeah, somebody attacked somebody. Like you might get a spike if a conflict comes up. But what is that doing to the actual oil reserves is the real question. So if you can answer that, and if the oil reserves are intact, but there are conflicts because of the cartels and a whole bunch of other stuff, it's not going to affect crude oil at all. So it's very, very contextual. Feel my pain. Feel your pain. I'm not Topstep support, mate. It's not the happy faces. I can't help you, for real. Like, because I don't have access to admin. I don't, I just go where the support people live. All right, that's going to be it's going to be it for Monday. I think I'm on group coaching today. I don't know. Don't quote me on that, but I will check the schedule. I think I am. So if that's the case, I will see you later today. Hopefully my voice gets a little bit better tomorrow. But yeah, in the meantime, we're going to wait for these silver levels to play out intraday. Again, no setups now, but they might come later. But right now, everything is a little bit quieter than usual. What happened to my... Did I write all of that on Big Silver? I did. Okay, that's fine. Yeah, so have a look at these levels. I told you my hypotheses around them. Let's see what happens into LME, COMEX, and the rest of the day. This was the Eurotrade. I'm Marcus Stoker T. Marcus Stoker T. I'm Marcus Stoker D. Yes. Let's get that right. And I will see you a little bit later. Take care.